Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Stacey Burke from Stacey Burke Trading. Today we're going to be walking through the templates Monday to Friday. We're going to be walking through the process that I use, and we're going to be addressing specifically 90-10 opportunities or signals. We're going to be talking about how to identify day 3 setups, 3-day setups, 3-session setups on a day 3. And we're going to be talking about day 3 longs, day 3 shorts, first red day, first green day, and the inside day. We're going to be walking through the major pairs, oil, gold, and the indexes one at a time. And all we're going to be focusing on today is what we've talked about in the last 2 videos specifically: timings, levels, and the behavior of price. Those 2 videos are Mastering the 3-day cycle, and the following one is also called Mastering the 3-day cycle. They're the last 2 most recent videos that were technically based, and today we're going to be going further just on the templates, but those 2 videos specifically address the levels and the timings, which we'll quickly review before we start the templates. Now, I want to talk again briefly that the 3 levels that every single trader has every single day are yesterday's high of day, yesterday's low of day, and yesterday's closing price levels. These are fixed levels that every single trader has at the beginning of the new trading day. I've talked before, again, the weekly template: Monday's day 1, Tuesday's day 2, Wednesday is day 3, and that is the midpoint range of the week. And it resets as a day 1, Thursday's day 2, and Friday is day 3, heading into our closing range of the week. We can do the same thing for the weekly high and low and closing price. My main time frame for trading is the 9:30 New York equity market opens. What that means is that unless there's major red news after 9:30 a.m., my trading window starts at 9:30 a.m. That does not mean that I get into the market at 9:30 unless I already have a thesis in place. I've already had to wait for major red news, whatever that may be. But I will wait for the equity market opening time before I get into the market. The days of the week: Monday, Tuesday, Wednesday, Thursday, Friday. I can have a Monday to Friday template for a pump and dump or dump and pump setup, a 3-day trading template setup for a high quality 90-10 best trade candidate. I can have a 3-day setup that could be Tuesday, Wednesday, Thursday. It can be Friday, Monday, Tuesday. It can be Thursday, Friday, Monday. And we will talk about that specifically, how to recognize a 3-day setup. And we also have 3 days of breakout traders into the market, which can also signify a 90-10 best trade opportunity. Timings, levels, behavior of price. Now, I talked about this in the last video, a weekly template. There's no price bars on here. And the reason why is that most traders are caught into chasing the price action, and they lose sight of the bigger template that sets up day 1, day 2, day 3. Day 1, day 2, day 3 for a best trade candidate. This is the high, this is the low, this is the previous day's closing price. Every trader has access to which day of the week it is, these 3 levels, the time of the day, and the day count. My goal is not about trying to guess a direction. I'm waiting for the templates to set up so that I can attack a market best trading candidate setup within that Monday, Wednesday, Friday template for either a 3-day setup, high of week, low of week, high of week, low of day, low of week, high of day, whatever that may be, or 3 days of breakouts. These are best trading candidate template setups. I am not trying to catch a move. grab some pips, scalp in and out on movement. I am waiting for these templates to set up. Timings, levels, behavior of price. If you're not sure what you're doing, you're going to be 50-50, if you're lucky. If you are prepared and you know what you're doing, but you don't understand the templates, you're going to be 50-50. But if you understand and you are prepared and you know the templates, now you're shifting the balance of success 90-10 in your direction. If you're not prepared, you don't understand what your edge is, if you don't mark off your levels, if you have no understanding or patience or awareness of timings or the importance of timings, if you're impulsive, if you're irrational, if you're engaging in YOLO type behavior, you will blow your trading account out. And that's gambling. That is not scaling up your trading business in size. And as a result, if you get emotional, angry, frustrated, bitter, reckless, you can destroy yourself in many other areas. I follow a basket of instruments, major currency pairs, oil, gold, indexes. I am only looking for 2 or 3 high quality 90-10 best trading setups over the course of the week. Any other trades that I may take, 3 session setups or session scalps, as the bigger template sets up. I am hunting the best setup on any instrument. I am not trying to trade one instrument every single day. There are pump and dump opportunities that will happen over 3 sessions, 3 days, 3 weeks, 3 months. There are dump and pump opportunities that will happen over 3 sessions, 3 days, 3 weeks, etc. So we're looking for that day 1, day 2, day 3 opportunity, first green day, first red day, inside day. We'll walk through the templates, and then I will encourage you as a matter of homework to go through your templates. Don't get caught into chasing little bars back and forth. Step back, look at the levels, and understand the bigger picture for a manufactured template that is designed for a best trading setup candidate. Now we're going to walk just specifically Monday through Thursday this week, and we'll talk about each pair. Now on Monday, Japanese yen, we don't have any levels broken. This was a U.S. session holiday, Columbus Day. We had a breakout on Friday. This offered a 3-session opportunity for traders in the U.S. session on the Japanese yen, but specifically with regards to the template, a daily level was not broken until Tuesday, giving us day 1 shorts in the market. Day 1 shorts are in the market. Day 1, day 2, no other levels broken. Day 3, no other levels broken. This offered a 3-session long trade if traders were willing to trade this on day 3, Monday, Tuesday, Wednesday, off of the closing price level. So again, I'm going to suggest I am not looking at all these bars. I consider this to be the matrix, the Fugazi. But what I am looking at is a first green day on Wednesday. First green day, a higher close than the open on day 3 that trades off of the closing level heading into our U.S. window. Day 1, day 2, day 3. Now we only have one daily level broken until Wednesday breaks through the high of the day. This now, when it breaks this level, remember levels, daily template, when it breaks this level, the high of day, that makes Tuesday day 1. Not until that daily level is broken do we start a new day count. This break of this level now confirms this as day 1. Day 2, we have a high of our Friday closing range, which we will come back to in a moment. Remember, Monday is the opening range, Friday is the closing range. Monday trades down into Thursday's closing price. It breaks lower. The break of this high of day now confirms this as a failed breakout. Day 1. Day 2, we're on a day 3 now. A day 3 heading into our US window. Thesis is going to be one of two scenarios. Well, actually one of three scenarios. A parabolic trend trade, a parabolic reversal trade, or nothing at all. We had major red news, 2 releases at 8:30 US time on day 3. So before we get to day 3, I want to address stuff inside. I would only ever be taking a trade off of a level, whether it's a closing price level from a previous day, a closing price level on the day, or on day 3, a closing price level or high of day, low of day level. These are the 3 levels that I am looking for trades at. I am not looking at all these bars trying to read price action. Very important for traders to disseminate my rationale. Day 1, day 2, day 3. Where is my opportunity? What level am I at? What is my thesis? Thesis is first green day. Day 2 continues in the long direction. We have longs in the market. Day 1 longs in the market. We're on day 3, potentially targeting the high of not only the week, we've popped the high of the week already and pulled back the current week, but the high of our closing range on Friday. We had major red news at 8:30. This is an example of a first bar opportunity if traders were going to get in line with that thesis on a 5-minute chart. This is a 5-minute chart, or even shorter time frame if their skill set suggests that. We have day 1, day 2, day 3 blowing off in the direction of the trend. We put our numbers and our EMA on this chart. We have another level hit now. Timings, levels, behavior of price. We are already in a vertical, parabolic direction. At this stage now, we have an opportunity to enter in either second hour, New York Open, or at a level. 1 push, 2 push, 3 pushes, it doesn't matter. It's going parabolic after the first bar trade in line with our thesis from the low of the session back through the high of the closing range of Friday. Not only do they go through the high of Friday, but we go 25 to 50 pips beyond that range. I want to repeat the importance of understanding once this level is broken, that confirms Tuesday is our day 1. If traders are calling this day 1 and we're still inside and then the market rolls over, now they're looking for a reason as to why that did not work. This is not day 1 until we break a daily high. Day 1, day 2, day 3, parabolic trend trade in the direction of the breakout after first green day. Now we're looking at the US Swiss. So I want to just reinforce again, traders are looking to trade all these swings and whatnot. I'm looking for a 3-day setup, whether that's Monday, Tuesday, Wednesday, front side, back side, whether it's a 3-day setup from a failed breakout starting our day count, day 1, day 2, day 3, or whether we have 3 days of breakout traders in the market. And again, reinforcing, we don't just get into the market. We're waiting for the setup, whether it's on day 3 or after day 3, off the level, in the timing window, and how does price behave. So we have our Monday again, U.S. session, Columbus Day holiday. There's our closing range of the week. Friday is our closing range. Monday is our opening range. We have our day count beginning at the beginning of a new week. A daily level is broken. So again, none of this is subjective. The days of the week, the timing. Okay, I repeat that. Go back and watch those videos about timings. New York Open is 9:30, but we have day 1 breakout traders in the market on Monday, our day 1. We're looking for a day 3 setup. Monday's day 1. Tuesday breaks out, day 2. Wednesday, traders are looking to counter trend a market because it's at the low of the day. And as I've repeated, don't counter trend a market unless you have a setup. This is what we call still front side. Still front side. Day 1, day 2, day 3, heading into our Thursday. Wednesday's our midpoint range of the week. Wednesday is our midpoint range of the week. And I keep encouraging people to understand this. None of this is confusing. Monday, Tuesday, Wednesday, day 1, day 2, day 3. Wednesday, Thursday, Friday, day 1, day 2, day 3. Monday is the opening range of the week. Wednesday is the midpoint range of the week. Friday is the closing range of the week. We have day 4 breakout traders in the market. We have Wednesday's high of day, midpoint range of the week. We get our little vertical explosion and the pullback and first bounce engulfment at the beginning of our second hour for an easy 50 pip continuation move back up on Thursday after day 3 breakout traders in the market and a 4th day to the low of the midpoint range of the week for our reversal trade on Thursday. Inside of our universal EMA, no discrepancies, no subjectiveness, explosive move on news. We're not trading the news. Second hour begins, gives us our trade coming off of closing price of Wednesday. So the pullback, higher high, the pullback and engulfment off of level, the closing price level, as well as the numbers. But remember, working off the levels itself, they've gone to the low of the day, exploded vertically, pulled back, coming off closing price, continuation trade for a measured move back up through the high of Wednesday's high of day. Next, we have the US CAD. These are 1 hour charts again, so we have a break on Monday of our Friday's low closing range of the week. And we have day 1 shorts in the market, day 1. And we come down on Tuesday, we have day 2 shorts in the market. Now, unfortunately, on Wednesday, it's an inside day until later in the session when they break the high of the day. Remember what I just spoke about in the Swiss franc example. The Japanese yen example. We get a break of the high of the day. Now we have a potential 3-day setup. That was Monday, Tuesday, Wednesday. A closing price level long trade potentially that traders may have taken in the U.S. New York session. But now we also have a day 1, day 2, day 3, 3-day setup. So this is where traders get confused. We have Monday, Tuesday, Wednesday, a potential 3-day setup that may eventuate on any instrument. But we also now have a day 3 setup on Thursday on the US CAD on our longer time frame 1 hour charts based on the break of a low that came back inside and the break of a high. We now have day 1, day 2, and Thursday becomes our day 3. So remember what I just said. This day is nothing. The day count does not change except we broke the high of the day. Once this level was broken, we can go back now and call this day 1, which means that Thursday is day 3. We are looking, or I am looking, for day 3 trading opportunities. We're down low, dump day. Day 1, day 2. Wednesday closes with a higher closing price. We can also call that a first green day. We'll talk more about this because we'll see this more often. We have lower closes and then a higher close. We have a break of a level that reversed after a break of a level that reversed that now resets our day count for day 1, day 2, day 3, Tuesday, Wednesday, Thursday. After major red news, we have our closing price level engulfment, end of the hour, major round numbers for an easy, explosive, almost 100 pip move on day 3. Timings, levels, behavior of price. So understand how to count a 3-day setup. Understand that when a level is broken on the opposite side, and we have a level that broke on the lower high of the day at the lower high of a week, we can now begin a new day count in a 3-day setup. So next we have our British pound, and same process. Monday, Columbus Day in the U.S. for the U.S. session. Tuesday morning we break a level. And when that level's broken, that becomes a projected level now for our day one count. Day one longs are in the market, opening range breakout. Day two longs are in the market. You notice I'm not discussing all these other pushes and pulls and everything else. Day one, day two, and on day three, we have a day one, a day two, and now we're into day three. We're waiting for that market to break out on day three. We get into our US window. Timings, levels, behavior of price. The market has a death candle that takes out the closing price level into higher level longs on day three. Now I want to just reinforce understanding what a death candle is. All this volume is trapped. The likelihood now we're on top of a level. This is a death line. We can trade back up to that as same as we could to a low of the day or high of day level. But it's about the time of day. We have major red news on the schedule. Day one, day two, day three, longs are in the market. Timings, levels, behavior of price. We've already had our death candle earlier in the day. We pump back up into our closing price level from Wednesday. The market breaks down on major red news. We have a market now that sits at the low of day level inside of a 3-day setup with 3 days of breakout traders in the market as we head into the beginning of our second hour. Remember what I said. Hourly chart template, hourly rotations, levels, behavior of price. This market is inside of our EMA on day three. This is a continuation low-hanging fruit. 1 bar stop, all in opportunity on day three, British pound. Day three breakout traders in the market, major red news, catalyst driving this reversal, whether the numbers meant anything or not. This is an engineered template. I want to reinforce that I'm not trying to read all the little bars back and forth. I'm waiting for these opportunities. 3 days of breakout traders in the market. 3 days of breakouts broken. 3 higher levels. 3 higher closes. 3 lower closes. First green day. First red day. Inside day. I am waiting for that template to show up. I am not trying to figure it out. So let's come back and start the process again. We have Monday's inside day. Breaks out on Tuesday. That's day one. So we talk about 3-day setups. Talk about 3 days of breakout traders in the market. We talk about 3 session setups. So on these days where if you're looking for a session trade, the same process would apply for a 3-session opportunity. Asia, London, New York for me. Front side, back side. If we're pumping up for 3 days, what might we call this? This would be a front side opportunity if we were trading in line with the 3 bursts, if that opportunity presented for a parabolic opportunity. We have day one longs on Tuesday in the market. Day one. Day two on Wednesday. So again, an example of where traders are trying to counter trend. And we saw a short reversal trade on Wednesday later in the session after the New York Open went vertical. A little collapse. But we have day one longs, day two longs, day three longs before the market starts to break down on a death candle. Death candle on day three, engulfing the whole upper level to the closing price level. So again, understanding traders getting caught and chopped up on little bar action. Level. The closing price level. 5 p.m. New York time is my closing time. That's what I use. Traders talking to me about all these other times a day and this and that. I use 5 p.m. New York closing charts. Hindsight does pay, and so does the knowledge to know not to counter trend a day three market that is collapsing because they are not coming back. Timings, levels, behavior of price. Second hour opens, engulfment at the low of the day on a day three. Remember, 1 push, 2 push, 3 push. This low of day level, this is not where this market is stopping. Major red news, we can only go in the one direction if we are taking this market, and the market continues to drop and fade. Lift the offers, day 1, day 2, day 3, pull the bids. The market collapses back down to where it started. Aussie dollar, we have our first day of breakouts on Monday, Columbus Day again in the US, day 1, levels. So I'm not focused on any of this. I just know that that level's been broken, day 1. Day 2, the level's been broken. Day 3, the level's been broken. Day 1, day 2, day 3. I talk about front side, back side. Traders are looking to counter trend on a day 3. They may have got a short trade in the U.S. session on a market that closed as a first red day. Timings, levels, behavior of price. We broke out of the closing range of Friday, which was not quite the high of the week, but we did take out the high of the week from Monday. They pushed up into that, just not quite taking it out. And then, so there's an understanding. Some traders are waiting for it to take out a level. If they go all the way back up to that level, they've pretty much wiped out any traders that were holding on to that for almost 2 weeks. Day 1, day 2, day 3, first red day. First red day is a high of day, high of session selling opportunity, if indeed it presents. They pump it back up into the Asian session, London engulfment, death candle below the closing price level, heading into our New York session window. Major red news release again. Second hour begins, and we have timings, levels, behavior of price. We're underneath the low of the day on a day 3 reversal. All in session, second hour collapse, all the way back down through the low of the week for a measured move opportunity. I'll put the numbers on here so traders can see that. We have low of day. We have our new hour beginning. Okay, new hour beginning. Timings, levels, behavior of price. Entering in, very tight stop. The pump trap, little bull trap for traders. Getting into this market, and the market continues to collapse for over 50 pips on day 3 after major red news. We can get back into the market. We've had our death candle, 3 levels of rise coming off of closing price on day 3 on the Aussie dollar. We have gold, and we had a gap, an opening gap from Friday's high of day, which immediately starts our day count. We have day 1, and if you follow Al Brooks at all, you'll know that Al Brooks would refer to this as an explosive bull candle, this gap. So this is a bull candle on day 1. We have day 1 longs in the market if traders were to resume that move. And we have on Tuesday, day 2 longs in the market. Day 2 longs in the market. And they layer on top of the breakout of the high of Monday. Several traders asked if this was the first red day. Again, day 1, day 2, we're still on the front side after an explosive move. Higher highs, higher lows. But what's important is timings, levels, behavior of price. On day 3, we had a parabolic move in London that came off of the closing price level. We'll go down and zoom in on that in a moment. But I want traders to, again, just get away from the little bars and stare at the levels. Day 1, day 2, day 3 longs in the market. Day 3 longs in the market on our Wednesday. Parabolic trend trade on day 3. Now, traders, the market was already parabolic in London, and traders were trying to counter trend this in a market that is making higher highs and higher lows. No evidence of a break in structure, no reversal or catalyst that broke down inside for a reversal opportunity. This market continued to move higher on Thursday. So again, coming back to Wednesday is our midpoint range of the week. Midpoint range of the week, heading into our closing range of the week. Now we have, if we start our day count over again, day 1, day 2, higher highs, higher lows, this market may still go back and retest that level. Timings, levels, behavior of price on Friday, Free Cash Friday. No idea what it will do. but we're making higher highs and higher lows. We have day 3 longs in the market. We have a reset potentially now. So if we come back to Tuesday and redraw our level, this may now be a breakout pullback for a possible retest of the high of the week. Tomorrow we will know. When I come to the US session, I will have a 3-session potential setup for either a parabolic continuation trade. We have major red news at 10 a.m. We may have a reversal trade, or we may have nothing at all. This is a day 2 after our day 1 reset, day 2. And until we see 3-session setup tomorrow, we may have nothing at all. It may not make sense. We might not even look at it because we're looking for simple day 1, day 2, day 3 opportunities. It gave a beautiful trend trade in London for traders. This market has continued to move higher, higher highs, higher lows in a market that is potentially still in a parabolic ascending triangle. Sorry, not triangle, but channel. Parabolic channel heading into Free Cash Friday, day 3. So the same process applies on oil. We broke out on a large gap, which again Al Brooks would consider to be a large bull candle. We're outside of Friday's high of day range and also Thursday's. So we have day 1 longs in the market. Day 1 longs in the market. We then proceeded to have an inside day. An inside day that stayed inside of Monday's high and low range. Monday's our opening range for the week. Monday, Tuesday form our initial balance. It's an inside day. But on day 3, we have a peak formation that engulfs our closing price of the week, which was lower than Monday's closing price. Tuesday's closing price was lower than Monday's closing price, which theoretically, after this market engulfs, could now be called a first red day. An inside day and a first red day. The key thing is though timings, levels, behavior of price. We only ever work from one of 3 levels. I only work from one of 3 levels. The timing window. How does price behave when we get there? We're looking for, on day 3, either a parabolic reversal or parabolic trend trade. Timings, levels, behavior of price. We get to the low of the day, which automatically now triggers inside day traders into the market. We get towards the end of the first hour, the market pins the low of Monday before pumping up 50 pips. This is a 5-minute chart. I reinforce the importance of timings. New York Open, 9:30. I'm not trying to read all this and get in. I'm waiting for the level and the timings. The market engulfs. Peak formations are up. We are inside of our universal EMA. Thesis is a parabolic collapse filling in the gap on day 3 in line with our inside day breakout, our closing price death candle, and a continuation trade at the New York Open. 15 minutes into the session, we get our engulfment, pin hammer, 1, 2, 3 engulfments for the collapse down into the breakout of Friday's high on day 3 on West Texas oil. Wednesday resets. We have day 1 shorts in the market. That becomes our day 1. Thursday is day 2, as I talked about earlier in the video. You'll notice they came back up into the breakout levels, timings, behavior of price, not only the low of Monday, but the low of Tuesday's breakdown low of day level. And just before we move on, I want to just demonstrate also the high and low of the day gave a measured move range expansion target, which coincided with our breakout level from Friday on Monday's opening gap. Day 1, day 2, day 3. Lower lows on Thursday, which becomes a new day 2, pumped up 3 levels into our breakout before collapsing later in the U.S. session. Tomorrow, Friday, is day 3. And the closing price of Thursday is a first green day close. Closes above the opening price of the day, the closing price of Wednesday. So we'll see how this market sets up as we head into our U.S. session after 3 sessions to identify whether or not we have a best trade candidate opportunity on West Texas on Friday, day 3. We'll look at the S&P. We'll close it out here. You can look at the other indexes. DJ similar, NASDAQ slightly, somewhat, just tiny bit different heading into the U.S. window, but I want to go back and just identify the process again. Monday, U.S. session holiday, but we had day 1 longs in the market. Day 1 longs in the market, Monday. Day 2 longs in the market on Tuesday, day 2. Inside day on Wednesday. So again, I mentioned to traders, if you want to increase your odds of success, be trading from the levels. This is an example of where traders may have shorted something up high, been able to obviously get a short trade down. Russell 2K went right to the high of the day at the same time. But I'm looking for 3 days of breakout traders in the market. If we were to have taken this trade, well, obviously we would have been looking to lock in profits, whether that was at a breakout level, whatever that may be. But again, no day 3 longs in the market. But we get that gift on Thursday. So remember, front side, back side. We get a little break in structure on our initial trend line, but we get our day 3 longs in the market on Thursday outside of the range. This is an example of a 33. Asia, London, New York opens up high with a death candle. Timings, levels, behavior of price. They pump back up for a move later in the session, but the initial drop gave traders, this was on major red news. We'll look at this on a smaller time frame. Day 3, high of week, targeting potentially low of day. We have our major red news release. Again, a death candle, a neckline where all the volume from Asia, London, heading into New York are trapped above there. First bounce opportunity on a 5-minute if traders chose to enter this prior to the New York Open. Pullback and engulfment on the New York Open for a 100 pip collapse on the 5-minute chart. Obviously on a 1-minute, in line with our larger time frame thesis, whether you use a 15-minute or longer. 1 hour, we had our 3 days of breakout traders in the market and a death candle on the 1-hour chart. So the thesis is short. And again, I'm going to re-encourage traders to stick with the 5 minutes and above until they have the consistency and the skill set mastered to be entering in on shorter time frames. Day 3 longs in the market, 3 levels of rise, 3 sessions outside of the high of the week. The death candle collapse, the pump up to the level. So again, the first bounce opportunity coming right off the closing price level. No fear. Day 3 up top for the collapse, down for well over 100 pips depending on where traders got filled, and 100 pips if traders took the trade at the New York Open. So you can go through the other indexes. In the interest of time, other currency pairs, the same process applies. Identify the levels. Don't be chasing all the price action until you have the setup there. Wait for major red news. Stick to the timing window. Understand if you're using an hourly template, when might the opportunity be for you? Beginning of a new hour or at the end of a new hour. Manage yourself in live time, execute the trade, manage your risk, take profits, and forget about chasing all the other price action inside of the matrix. Big parabolic opportunities come after setting up day 1, day 2, day 3. Keep it simple, traders. 1% better every single day. Step back and allow the market to set up a best trade candidate template. Enjoy your day, and may the markets go with you.